In this Sunday Coaching Spotlight, we're tackling the issue of having a mental bias in the market as a trader. Hi, I'm Créde Sheehy-Kelly. I'm a high-performance psychologist and a coach to traders and online entrepreneurs. Every Sunday, I pick one question submitted by readers of my newsletter to answer in a coaching video. If this content is helpful to you, please like and share this video and subscribe to my YouTube channel for more tips and resources on how to get the mental edge and win bigger. Let's get into it. Today's question is from Lisa. Lisa says, I have a put bias when I'm trading. I do my best to accept and only take good put setups, but it's frustrating to miss so many trades. How can I deal with this? The first piece of advice I have is to take the time to understand what's causing this put bias for you. So two people who both have a put bias might actually adopt a different solution to fix the issue, depending on the root cause of the issue for them. So I'm going to offer up two different potential root causes and two solutions that match those causes for you to consider. First off, let's recap what is a bias. So a bias is simply a lens that you look at the world through, or a way of looking at the world that filters out some information and data, and that laser focuses on information and data that supports an existing belief that you already hold, or that supports an existing default way of approaching the world that you hold and participate in on a daily basis. So let's make that a little more concrete. What does a bias look like in trading? If you have a bias for puts, it means that one, you're either only seeing the opportunities to take put trades, so that your mind is actually filtering out all of the information and data that would show you that there's a call setup forming and that it's a viable trade for you. So it's like your brain isn't even presenting that information to you. It's there in the market, but in the journey from the market to your brain, it's being filtered out because of this bias that you have for taking put trades. So that's one possibility. The other possibility is that you are actually seeing that data and you're seeing the potential trades appear, the setups appearing to take the calls. However, you're choosing then to only take the puts. So you're disregarding those opportunities, even though you're seeing them. And why might we actually adopt a bias? So at a fundamental level, humans use biases, or they adopt them, because it's a quicker way of processing the world around us. So it's like a shortcut for our brains. It's easier and quicker to make decisions when we're adopting biases. However, they're not always supportive. They don't always work in our best interests. There are two common reasons why somebody might develop a put bias. The first one relates to our subconscious mind. So this is where previously you've had some traumatic experience of taking call trades. So maybe you took one call trade and you happen to lose 20, 30% of your account. That would be seriously unfortunate. Or maybe it's that you had a run of call trades and maybe it was just bad market conditions at the time or something like that, but you developed a habit where you had experienced a few losses on call trades and now you've developed this aversion to taking call trades in your subconscious mind. Basically, your subconscious is associating taking call trades with pain and therefore it's trying to protect you at all costs from taking those trades. If that's the case, then the fix is to go back and address those painful experiences, those call trades where you experienced losses. And there's a systematic way that you can do this. So the first part, whether those trades were a week ago, 3 months ago, or 3 years ago, you go back and you analyze the trades and you ask yourself, what did I do wrong? So what were the actions that I took that led to those trades being significant losses? And once you've done that, then you can identify the learning opportunity. So you can ask yourself, well, what should I do differently in the future if I was taking a trade like this to make sure that those losses don't happen? And maybe it's that you got out of the trade too soon, or you held the losing trade too long, or whatever it was. But you put an action plan in place, or you set a goal to make sure that that doesn't happen again. So in that example, the goal might be that I really make an effort to get out of a losing trade when it hits my stop, so I don't let it run past my stop. But the fix doesn't stop there. We also have to address the painful trauma in the subconscious mind. So what we're trying to do is actually detach from the emotional hangover of those trades. And rather than talking through that whole process here, I'm just going to link to a YouTube video that I created previously that talks you through a whole systematic meditation for how to actually unhook and dissolve the emotional trauma and hangover and pain linked with previous losing trades so that you can free yourself up to completely reset to neutral. So that's a process that you can go through if it's resonating with you that this reluctance to take call trades is because of previous negative experiences with call trades. The second potential reason why it's happening is a lot more straightforward. And that might simply just be down to your skill level in taking puts, your level of comfort, competence, and your confidence in your ability to take put trades versus your ability to take call trades. And if that's the case, let's say that you naturally have a preference for puts, it's part of your edge. That's perfect. But then you reinforce that preference by taking more and more put trades, experiencing wins, and then you solidify that habit, that preference for put trades. And all the time you're upskilling your technical expertise in taking puts, but you're not getting enough practice taking calls. And so after some amount of time of doing this, you're going to end up in the situation where your skill level for taking puts is up here and your skill level for taking call trades is down here. And then if you combine pressure with that, so when you're in the market, you're trading your own money, there's a natural level of pressure inherent in that situation. When you add pressure into the mix, our brain always defaults to what's easiest, what we feel most comfortable doing. And so if this is the case, you would be defaulting to only taking put trades. So the fix to this is pretty straightforward. It's basically about getting more time on the clock, practicing taking call trades. And I would suggest approaching this in a very structured way. And you don't have to risk your own money in the market to do this. So it could be that you decide you're going to do 3 practice sessions a week on sim where you only look for call setups and you only take call trades. And then you do that systematically, consistently, week after week. You're getting this practice and you're actually increasing your skill level and your confidence in taking call trades. So you're seeing success, even if it's at the level of sim, up to the point where you start to feel confident enough to actually bring it into your live trading. And the other benefit of this, taking this approach, is that you're also getting much more exposure and experience to actively seeking out, recognizing those call setups. So you're training your brain to start processing that data that's the market has potentially always been showing you, but that you have been filtering out up to now because of your put bias. So you're training your brain to recognize the patterns of the call setup appearing. So it's super simple. The fix is just that you're trying to improve your confidence and your competence in taking call trades. And then at the end of that, once you've upskilled a bit more in your call trades, what will happen is that it's available to you to take either puts or calls. That doesn't mean that you have to own, 50% take puts and 50% take calls to be a good trader. You still might have an edge in taking puts, and that's fine. But maybe if your profit target is X amount in a month, it could be that you end up deciding to take about 70% puts and 30% calls. And maybe taking those call trades is a simple, straightforward way for you to just increase your profits. Maybe the puts are the ones that you win bigger on and that make most of your money for you, but having that option to take those call trades when the opportunity appears is overall going to make you a better trader. So that's my answer, Lisa. Hopefully that's been helpful and beneficial to everybody else watching. If you also want to be in with a chance for having your question answered on Sunday Coaching Spotlight, sign up for my newsletter. I'll leave a link in the description box below and also in the pinned comments. And I'll see you next week.